Hello everyone. In this video, we will be exploring what happened to Nifty and Bank Nifty. First, let's get started with Nifty. Nifty had a first 15 minutes candle. This is, you see that there is about 150 points fall, and then it continued to go down consistently, and then it reached a low of 17,493, and then finally it retraced and closed at 17,611. Right? Such a massive fall in both the indexes, and clearly the indexes have breached all these levels that it was stuck for a very long time. And first time it just broke 17,700 levels after many months, and right now this is where it has closed. So what does this mean? What can we expect on Monday? So this is going to be a very critical situation, because once this level is broken, we are expecting a much deeper fall. At the same time, budget results are also, budget is also going to be released on February 1st. So a lot of things to look at. And what are the likely situations and scenarios? Let's explore that. First thing is that, if on Monday the market breaches the 17,300 levels, say that there is another gap down and then it opens at this level and then it breaks down, then we are in for a very major correction. You can expect Nifty to reach 16,800 levels pretty soon. So that's one side of the story. Suppose if there is a gap down and then it finds some support at this T3 level, which is 17,400 and 400, then it can possibly reverse and then take some sort of reversal and then head towards 17,700 800 levels. And there might be some sort of rejections happening probably on 31st. The index may be stuck between this T3 and T4 levels, and as per the budget results, probably it will break up or break down. Whichever side it's going to lead, we will have to wait and watch. And most likely, my expectation is that it should consolidate between this T3 and T3 levels, that is 17,400 levels to 17,775. This is the level in which it will consolidate, because already the Nifty has broken a critical level, and they don't want to really break this. Probably they might trade somewhere around this level itself, and then 31st also they will try to maintain it. And then if the results are good, the financial budgets are good, then they may try to recoup and then go up, or they might break down, which looks very unlikely to go up. I think this correction is due for a very long time, and possibly I am expecting once this breakdown happens, 16,800 is definitely on cuts. And last week we were predicting that there is about 2,000 points of fall. That's very likely. The Friday video that we posted, I have clearly mentioned there. And in 2 days, the market has fallen over 500 points, not 500 points, even 600 points in Nifty, and over 2,600 points in Bank Nifty. That's a very massive fall, right? And the VIX factor is also like improved. We have VIX at 17.32. That is a very good thing as an option buyer, because you need volatility in order to make money, and that's not good for option traders, of course. But at the same time, it gives equal opportunity for both buyers and writers if you know what to do exactly. Right now, looking at the situation, let's look at the FASP levels. The FASP levels on both the extremes, T7 is at 18,018 and the lower side is 17,168. Now, because the VIX has improved, the option premiums have really got much mobile, and it's like increasing on both the sides pretty dramatically. That's a very good thing, because as an option buyer, you wanted to really catch those 15 points, 20 points every trade in order to maximize your profits, right? So this sort of volatility will help you reach your goals much faster. Only thing is that you should find the entries correctly, right? My sincere advice is do not take any sort of contra positions till we clear the budget results. Just stay with the trend. Supposedly the market is giving a breakout, say T2 levels. You keep on the higher side, it breaks T2, then take a CE position and then keep trailing it till T3 as target. If it clears, then T4 as target. Keep trailing it as much as you can. And if it is going down, similarly, T2 will be the first target. Say that you got an entry at T1, T2 will be the target one, and pivot will be the stop loss. And then if it crosses T2, then keep trailing it, and then T2 will be the stop loss, T3 will be the target. Likewise, you can just keep on expanding. That's something that you can do as option buyer. As option writer, what you can do is possibly go to the extremes of it. Even T7s are good options in Nifty. For Nifty, you can comfortably write 18,000 and 17,000, both the extremes that you can write, and then completely wait for the day and then collect the premium. And what should be the stop loss? The stop loss is T5 on either side. You write T7 positions on both the extremes, and as soon as the market reaches T5 on either side, that should be used as stop loss. Otherwise, the consolidation will give you good returns, right? If it is consolidating between T3 and T3 throughout the day, you will be easily picking up some points. And we have to be very careful, should not be going too aggressive. If you are going too aggressive, then any sudden movements of about 200 points or 300 points or sudden gaps or any news based events, like Adani is also having some sort of news going on, and all this will have trigger some sort of dramatic moves. That's not good for an option writer. That's why I say as soon as you see that either side it's reaching T5, whether you are in profit or whether you are in loss, you should exit the position and go for T7 writings. That's the best thing you can do as a writer. As option buyer, I told you clearly, like whichever direction it is taking, keep one level down as stop loss and one level highest target. Keep trailing it and then go as long as you can, because there are, even this could act as resistance zones on the higher side, but then still the market has not respected that. You see how the fall is. This is a zone that was tested for several weeks, and today it broke as if this is nothing. So this will act as a resistance. As soon as it reaches here, this zone will act as resistance, and this zone will act as support. Although it didn't test it yet, this will be tested on Monday, hopefully, otherwise on Tuesday. And what does the long-term sentiment look like? So it's not about just having a quick view of what's going to happen on Monday. This is something we are at a juncture. We have to have a larger picture of what's going to come. It's a make or break situation. The only savior is the financial budget that's about to release on Feb 1st, right? Other than that, the indicators are clear that it's going to be a downtrend. Either it is going to be a recession or a reformation. So is it a recession? That will be answered only when it breaks this level, this T7 levels, and then it enters into this zone, and then if it further breaks, we enter into a recession sort of setting. Then there is another 400 points fall that's going to come. So that is one aspect of it, right? And it won't be like one steep fall. Here it happened like one steep fall, right? It won't be like that. It will drag each day like 300 points, 200 points, like that, and then it will continue to go for weeks to come and even months to come. So that is one scenario. If it breaks this critical zone and then reaches by financial results like on Feb 1st or post that, if it is reaching here, then it's really a bad sign. We will have a larger fall for weeks and months to come. Supposedly it sustains and then goes higher again. Say that the financial budget results were good and then it manages to reach here, then again, this will be considered as some sort of, small correction, and then the rally might consider, continue on the higher side. But then that's not a good thing, because markets have rallied for several months together. Since June till now, the market has rallied continuously. In between, there were some small pauses and corrections. But apart from that, there was no major corrections happening. And if it continues to rally up, there will be a point where in this year that could lead to some 3,000 points fall or 4,000 points fall in a couple of days. Very massive falls, much bigger than this, can happen. So to avoid that, if the market has to sustain and then grow consistently, they should use this opportunity to go as much as they can and then correct and fill all the gaps that's created in the past. Whatever gaps were created in the past, that should be covered. Like, this is a gap, this is a gap. You need to fill all this gap and then move higher. That's one good thing. If the market is able to do that, that's wonderful. If not, we will have major falls like this. These are the gaps that was not filled in the past, and suddenly you can see all that breaking it like nothing. So that's the scenario for Nifty. Just to reiterate, T7 writings, T5 as stop loss, and then that is for write up. For buyer, whichever side it opens, and then you follow the same direction. Keep one level down as stop loss and one level up as target. And as soon as the higher targets are achieved, keep trailing it and go as much as you can. So that's the trade setup for Nifty. Let's explore Bank Nifty now. Bank Nifty also had a terrific fall. For many days we were expecting this fall to happen, but in 2 days, that was the surprising part. I expected this 2,000 points fall coming over a week's time, like 600 points fall, and then 800 points fall, and then 1,000 points fall. But then, to my surprise, it had 1,000 points fall yesterday, and then 1,200 points fall today. And really, it was a quicker fall. And there was a massive gap, and then it continued to fall, and then there was no looking back. It continued to fall continuously till almost till the end of the day. And last hour it gave some sort of relief, and then it retraced and then closed at 40,365. Now this is a psychological close. If it was above 400, still there is a hope, might be the market will recover. But this sort of close below 400 means that, it's poised to go down further. The only hope is that this is a buy zone. This can act as a buy zone. And then at the 40,000 levels, there could be a strong support coming in. But if this is broken, we are in for a very major correction, because the next level of support is at 37,700, which is about 2,000 points away, right? That's a massive 2,300 points away. That's a massive fall awaiting. So if this level is broken, you can expect another 1,800 points of fall, right? Once it breaks this 39,500, the next support is at 37,750. So that's a huge fall waiting. But in case the results are good and then the budget is all like fine, and then they will try to take it higher and then probably reach back above this zone, which is 41,800. They would like to cross this 41,800 level, and then would like to call it like some sort of retracement and corrections that has happened, and the market will continue to go higher. But in the long run, that's again not a good sign. They should use this opportunity to fill all the gaps that was created in the past, and then only they should go go higher. But if they manage to really take it higher pretty soon, then it is going to be very crazy towards the end of the year. We might see some sort of crazy action, some 3,000 points, 4,000 points fall can happen. Anyway, let's get to the trade setup for Monday. Again, the T7 levels are at 41,000 and 39,600. As an option writer, I really don't feel comfortable to suggest you to go for any writing. But if writing is all that you do, then test with small quantities, go for T7 writings on both the extremes. In fact, I would suggest You go for I will tell the strike itself. Go for 41,200 rating. Don't even go for 41k. Go for 41,200 rating and 39,500 rating. And as soon as it reaches T5 on either side, you can square off. Because this kind of fall and gaps, it's really scary. And just I will tell you, a couple of days back, just two lots of writing with proper edge gone wrong gave me 35,000 loss, right? Even with proper edging, it gave me that loss. Think about it. If you didn't edge it, it would have ran into lakhs. It would have ran into lakhs. So that's the kind of risk that we are talking about. Probably you are writing some strikes of about 150 premium or 200 premium or maybe even 300. But 300 points is nothing with one candle. This one candle will inflate the price by 500 points, and then you will be in big loss, very big loss, in fact. So writings I wouldn't advise unless otherwise it is properly edged and then you have strictly defined your stop losses. So do not go for that. But in Nifty I am okay, but in Bank Nifty I am suggesting that do not go into aggressive writing. You should know where to write. So 41,200 and 39,500 you can write and wait for the day to collect the premium. Whenever it reaches T5 on either side, you can square off. So that's one. As an option buyer, what you can do is same as Bank Nifty. As soon as the market is taking some sort of direction, let's say it opens with the gap up and goes to T2, you want to initiate a position, quickly initiate it, keep T1 as stop loss, and then keep trailing it and see till where it goes. And my suggestion is ignore the first 15 minutes because the first 15 minutes is extremely crazy. Like it will open at T2 and then suddenly it will go to T3 on the downside, and then next 2 minutes later you will see at T4. All sort of zigzag things will happen. You will be losing a lot on playing both the sides. So ignore the first 15 minutes or maybe even 20 minutes. 9:35, 9:40, you see where the market is settling. Suppose it's at T2 or T3. You can comfortably take a CE position. Don't get into contra position. If it is going up, take CE position. Keep T2 as stop loss, T4 as first target, and then T5 as second target, and so on. Keep trailing it. Suppose after 9:35, 9:40, if it is below T2, at T2, let's say you initiate a PE position, keep trailing it, and then go as much as you can by trailing the stop loss, and T1 will be the stop loss, right? So that's the trade setup for Bank Nifty. And be cautious. Don't take any sort of aggressive positions. We will observe what is going to happen on Monday, and that will give us some clue about what might happen on 31st as well as on the budget day. So Monday is very critical. In fact, if you ask me, Monday and Tuesday will define the course for next 6 months. Okay, that's the kind of importance I would give to Monday and Tuesday trades. So don't get into very aggressive buying or writing. Protect your capital, because once the direction is clear, there will be a lot of trading ideas, but you will not have the capital to initiate it. So protect your capital, play small, and when the directions are clear, let's go full throttle. So that's the update from my end, and wish you all a very happy weekend. See you all on Monday in the stream, and take care, guys. Bye.